when we become entrepreneurs, we love what we do so much that we never think about the possibility of being burnt out. But like, there will be a point where you don't want to work anymore. And are you setting yourself up for that time now?
I would see clients that earn a certain amount, $200,000 a year, whatever the case may be, $500,000 a year, and they have nothing. Like literally they have nothing. Yeah. Business operates in cycles. When the cycle came that they were in their pit, there's no cushion. It's like, well, wait a minute, your tax return saying that you were in the top 1% of income earners and you didn't think to pay yourself first anything?
Hello, King Edwards here, and I'm here with Alexis Holyfield and Gene Santos. I'm super excited to bring this podcast to you today. Today's podcast is how to prepare for an economic emergency. As you guys know, the economy is in a dangerous state, so you guys want to make sure that you listen to this podcast. Listen, if you are an entrepreneur and you have never had a wealth review, a review of your finances, you said it yourself in this podcast, Gene, $200,000 and $300,000 in today's economy is pretty much middle class.
Middle class.
If you have not signed up to get a free complimentary financial review with Yellowbrick Financial, make sure you do so below just by clicking the button, filling out the questionnaire, and somebody from this incredible team will reach out to you. I want all of you entrepreneurs to make sure that you pay close attention to what you are going to hear today as we talk to these two individuals about the economic state that we are in and how to protect yourself. So
thank you for the introduction, King. I'll start off with answering that question. What should entrepreneurs do? I believe it's right now positioning themselves and their mindset in order to take advantage of emerging markets and protect their wealth with all of the uncertainty that's happening as of right now.
1,000%. And I would say the same, just really assessing, deciding, and dividing what is serving and what's not serving, taking a true look at where they are, their point of destination, and what steps of navigation they need in order to truly prepare for what's ahead of it.
Insurance is such a powerful part of the equation. And I know that a lot of entrepreneurs don't even understand how important insurance is into their, what you call their bottom line. Can you explain what the bottom line is? Can you explain why insurance is important for all entrepreneurs to have?
So I'll start with what the bottom line is, and then I'll let Gene take it away.
Absolutely.
So essentially, the bottom line stems from understanding that there's three different types of people when it comes to money, whether they're entrepreneurs or employees. And so the idea is there's spenders, savers, and wealth creators. And so each of them have different characteristics and behaviors that they do. And so going back to the bottom line essentially means that our purchasing power or our money literally goes back down to the bottom line. And so technically using the dollar one time versus 3 or 4 times.
Yeah, I think that's a great point. I would say, and what I like to say, being in the financial industry for 12 years now, one of the most important things is with insurance, it's about preserving your wealth. But with finance, it's not a one size fits all. It's how do we make all of our assets work together and leverage those assets multiple times. With insurance is one piece of finance and a very important piece. So it really protects your bottom line when it comes to preserving your wealth, passing on your assets to your next generation, as well as getting competitive growth with your assets. So as part of the entire financial plan, I would say it is one of the most important pillars to have, along with all of the other assets that you're building.
What exactly do you believe an entrepreneur should do in order to protect their wealth using insurance?
A lot of times we talk about leaving a legacy, but oftentimes people aren't talking about how to live one. Right? So like even with what we say in the Millennial Millionaire is like how to live and leave a legacy. Because one of the most powerful things that Gene has been able to share is both as a solopreneur, entrepreneur, right? Solopreneur meaning it's just you and your business. Entrepreneur meaning you probably have a team, or even employee, really being able to use the insurance, the cash value portion for the living benefits so you can live a legacy. Does that make sense? So kind of how he said what the need is. Some people will say, I don't have children. I don't have a family. Or maybe they don't feel like their family is worried of them leaving a legacy. But the reality is if you're using cash value life insurance and leveraging it as an asset class, you're able to live a legacy with that. Does that make sense?
Absolutely.
So you use it more so for living benefits than just death benefits. So when you asked, why aren't we taught about it in school? So that book that I share often, The Modern Money Mechanic. Okay, so first of all, Miles Monroe always says your purpose is unknown, mismanagement is unknown. Most people don't know the purpose of how money works or why it works. So there's two reasons why I believe that it's not shared in the school system. The first reason is because in 1903, John D. Rockefeller founded the General Education Board. He put up like $180 billion, which today, I don't know, it's how we go a trillion, right? But he created the General Education Board. And he's also known for saying he wants a nation full of workers, not a nation full of thinkers. Have you ever heard of Spelman?
Absolutely.
Do you know why it's called Spelman?
Mm-hmm.
That's John D. Rockefeller's wife's name.
Oh, I mean,
Yeah, her middle name is Spelman. The thing is that if you have, when you say, why wasn't this taught? Well, if you understand the philosophy of the person who created the American education system, because we're still under that curriculum today.
absolutely.
So $180 trillion. And it wasn't just him. You know, he had some of the people closest to him. So all of the HBCUs are named after the people who invested in it's called an endowment.
Uh-huh.
And that's basically what they have. So I believe it's a tax deduction. You put this money in this endowment, but it's only for school. It's only for education. So they dump in massive amounts of money. And the agreement was, do you put in this money, we'll name the school after you. So while a lot of our generation, right, they'll understand, okay, you're popping your stuff about going to Spelman or HBCU, not recognizing where that curriculum is coming from.
Mm.
It's created by someone who says they want a nation full of workers, not thinkers. So when you ask ourselves, or I ask myself, well, why wasn't I taught about how money works? Well, it wasn't intended for us to know how money works, because if we're working to help their economic machine go and we learned how money works, why would we keep working for money?
Absolutely.
The system is made for a generation of workers,
Mm-hmm.
and I believe people take the financial system for granted. They think it's already laid out for them. You go to school, their parents are taking care of them, you open up a bank account, and you learn as you go. Right now, we're seeing, I would say, an awakening or a trend, people starting to understand that the government and these institutions aren't built for how fast technology is moving, how fast the economy is moving. And people are starting to see we need to take this in control of our own hands. But as Alexis was mentioning, these systems have been built over almost 100 years ago, right? So right now it's time for a change. People do need to start speaking up and voicing out their opinion. Hey, we need more financial education within our institutions, because what was working in the past is there's an update and there's an overhaul needed for us to be effective and for us not to struggle in the future. We see it, all of that, people struggling now with inflation, with our current state of the economy. So these conversations are very important with what is out there, what information is out there, and then what can it do for me?
One of the things that made me very interested in insurance, or even understanding finance at a deeper level, was when I went through my own journey and I realized, and I started doing research and realized that 98% of all entrepreneurs are earning less than $1 million per year. 86% earn less than $100,000 per year. And when you think about all of the mechanisms that exist for entrepreneurs to make money, keep money, multiply money, how are that many entrepreneurs failing? I always compare it to, imagine going to a restaurant and asking the chef about a meal that you ordered that you loved. The chef gave you 95% of the ingredients, right? But the 5% of ingredients that he left out are the exact 5% of ingredients that actually took the taste to the next level. That's exactly what they've done in the education system when it comes to finance. So as an entrepreneur, I believe that it's very important for you to take the next step in understanding how financials work, taking your financials seriously, because you don't know this information inherently. Like, don't think that just because you had some success as an entrepreneur that you know how the game works. Because in reality, as I said at the beginning of this podcast, there are 3 very important mechanisms that all of you guys need to understand. If you're already successful, you know how to earn money, but are you protecting your money in a place that's outpacing inflation? Are you multiplying the money that you have? And are you even thinking about the future of your work life, your money, your finances in general? We had a conversation once where we were talking about, what is the biggest motivating factor that you have to really, keep pushing the needle forward every day. You asked me that. And I said, because I don't want to be an entrepreneur forever. right? I don't want to work for the rest of my life. And I think when we become entrepreneurs, we love what we do so much that in the beginning that we never think about the possibility of being burnt out. But like there will be a point where you don't want to work anymore. And are you setting yourself up for that time now? As I was listening to Jim Rohn, he said the best time to start something was 20 years ago. The next best time to do it is now. Right? So no matter where you are in your journey, are you now thinking about where your future financials will be? Are you preparing for that? So with that being said, I do want to end this podcast talking about the spender, saver, and the wealth creator. And what that means from an entrepreneur's perspective. And I also want to know why, because both of you are entrepreneurs, what made you interested in insurance specifically? And if there was one key takeaway that you want entrepreneurs to take from this particular segment.
The spender, saver, and wealth creator, it really goes, we can align it with the earn, protect, and grow. So there's like a root word in the word spend. Do you know what that root word is?
And.
Right.
Okay.
So when you read the book from 1913, The Modern Money Mechanic, where purpose is unknown, mismanagement is inevitable, money is meant to have velocity. It was actually intended to go out and come back. Times 3 or 4. But in seriousness, with that being said, when we're earning money, like the earn portion, if we spend it, we're literally ending the velocity and we're losing at the game. But there's no referee. So that's what inspires me. That's what inspired me as a person who's leading, building businesses and all of that, is to understand that there's no referee in this money game. People think money is a battle. It's not a battle, it's a game. Like wealth creation is a game, right? But can you imagine playing a football game and the referee never like blows the whistle and is like, stop.
Right.
We don't have that. So what happens is when you're earning, you're spending, you're ending your money velocity. And you said something key. You want to get to a point to where the money that you worked for is working for you.
Right.
But if my income is providing for my upkeep, it becomes my downfall. Right. So if I'm ending all of my money that I'm earning, I will simultaneously not only end up back at the bottom line, but I have to start all over again, right? So then that moves into the protect and the savers. So we don't want to be spenders. Even if you're an entrepreneur, one of the things that I learned quickly is I would see clients that earn a certain amount, $200,000 a year, whatever the case may be, $500,000 a year, and they have nothing. Like literally they have nothing. The business operates in cycles. When the cycle came that they were in their pit, there's no cushion. It's like, well, wait a minute, your tax return saying that you were in the top 1% of income earners and you didn't think to pay yourself first anything, right? So that's what goes into the protect. It's like, okay, I'm earning income, but as a wealth creator, there's 3 rules, right? Number 1 is always pay yourself first. Number 2 is always make sure your money is working harder for itself than you do. And number 3, never violate number 1 and number 2. So if we don't do that, we can't get to the protect phase, right? And protecting means, okay, now I'm paying myself first. I'm keeping a portion of everything that I'm earning because we're creating. Does that make sense? We're creating products. We're taking our intellectual property and we're actually creating an economy in real life. So if I'm not keeping a portion of everything I earn, that ain't it. So if I get to protecting, I'm now protecting a percentage of everything that I'm earning. But if I'm not protecting it in a place that I don't outpace inflation, which the second question you'd ask is why insurance? Well, I understood that I'll have insurance on everything else. Even my flight asked me if I want to pay extra to protect my trip. My phone, my car, I couldn't drive off the dealership without the insurance. But I needed insurance for that. So money is not the most important thing in the world. There were oxygen. If it's there were oxygen, that means that I can't go that long without it and I can't live a day without it. So why wouldn't I insure my money?
Okay. Absolutely.
So that's where the protect portion comes in. It's like, okay, well, if I'm paying myself first, but I'm not considering where it will be protected to outpace inflation, and then to ensure that I can leverage it and use it 3 to 4 times, then I'm also losing in the game of wealth creation. But there's, again, no referee there to stop me to say, hey, that's not what you're supposed to do. Just protecting the money, but not outpacing inflation or not growing the money, which is the third sector, which is where wealth creators come in. I'm still losing at the game badly, even if I'm earning 5%. I know a lot of entrepreneurs that dump hundreds of thousands of dollars into CD accounts. Mm-hmm. But if I'm earning 5% and inflation is 4%, mm-hmm. I'm not really protecting anything. I'm actually evaporating my cash. Does that make sense? And then lastly is the wealth creator, which is the growth. So wealth creators understand that there will be portions of things that we need to spend on, right? But we don't spend, we circulate. Then we protect our fund. We're outpacing inflation. But then we understand, wait a second, this money is great growing, but how many times can I use that dollar? The reality is, in any market-based investment, we can only use the money once after the IRS has taken what they want to take on the growth of our money, right? As a wealth creator, you recognize, what vehicles can I use where I can not only protect, outpace inflation, but that I can also leverage this money and use the money 3 to 4 times.
Exactly.
Cash value life insurance leverage as an asset class is the only vehicle that I can do that. So when I'm thinking of, like you said, Jim Rohn said, the best time to do something was 20 years ago. You know, I didn't have that opportunity, but the best time is now, but I still feel like we're 400 years behind. So when it comes to wanting to play the game, know the rules to the game, and being able to actually win at the game, I believe that cash value life insurance is what actually marks off all of those boxes. And
no, I love how detailed that was. Yeah. That makes a great point. I have, for example, talking about inflation, $100 in 2017 is only worth $70 now. That's how fast inflation is moving. So when it comes to, that's very detailed. So I'm going to paint more of a broad stroke about this. So I would say that it's a thought process, right? It's how do you preserve, protect, grow your wealth? And I think right now what we're dealing with is, with social media and technology, there is an issue where everyone is trying to keep up with each other. As you said, there's I would say, an epidemic of keeping up with the Joneses, trying to live a life that you're not really able to live. And I've worked with so many thousands of clients, people making less than $100,000 a year, people making $500,000 a year, people making millions of dollars a year. And it's a great point. It's, some people are not living within their means. And how do you position yourself to preserve that? Because some people making less than $100,000 are actually living a better quality of life than some people making $500,000 a year. That is, when you really think of that, how many people are going through that, and how do you really position yourself to not be in that position? So, and really what started me in the industry is my parents wanted me to go into the medical field, which I did. I was just going to school to become an anesthesiologist. And when I realized it's going to be 10 years in school, going to be a nonstop career, only to be doing well, but depending on where you live in Los Angeles, sometimes that's where I'm from, making $200,000 a year, $300,000 a year. That's, at this point, with the taxes, you're being taxed, you basically end up becoming middle class. So, the light bulb turned on because it really made me think of, where can I position my money? Every dollar can be used as an employee. So where can I position my money to work for me while I'm asleep, right? Rather than putting money into depreciating assets or even liabilities, what can make me money grow over time? And as you said, more importantly, keep up with inflation. So I think those are really the thought process you have going into your financial plan is actually more important than the actual products or services that are out there.
Yeah, and I just want to add a bow on that. And that is why I believe that the full comprehensive financial planning is so key. Because when you hear about it from a broader perspective, it's kind of confusing. It's just like, why would I need that? Does that make sense? But it wasn't until I was able to see. So really quickly, there was like a presentation that I seen at the first money meeting I went to. And they basically drew a 3-legged stool. So I'm like, oh, this is a perfect example. So it actually looked like this, right? It had a little table, because this is secure right now, right? It says this security will represent the security of your retirement in America. And so each leg had a representative. So one leg said pension, one leg said Social Security, and then one leg said pension/retirement, Social Security, and personal savings. And so they basically went into saying that 90% of corporations in America don't provide pensions anymore. right? And insurance products, annuities, side note, were the first pension. So that's something to think about. But they no longer provide those. Retirement accounts, about 50 to 60% of people weren't properly saving the whole time because no one tells them to do that. So they say for every person who retires, they have about 2 years before they have to go back and work again, right? You see like older people at Target or Walmart, greeters who are like in their 80s, like, man, aren't you supposed to be having some soup on the golf course? What are you doing here?
And people are living longer, right?
We're living longer, right? So the thing is that when it came to understanding that retirement and pension weren't an option, they erased it off. Now, if we took one of the legs off, what's going to happen to this thing? It's going to fall over. But then they also had the Social Security, and they showed us on the Social Security Trust Administration, because it's a trust fund, that it will be exhausted by 2035 or sooner. And this is on the Social Security website. So for all of us, we all, can access this. You just go on the website and it says that the Social Security Trust Fund may be exhausted by 2035. Now, if we recall last year, there was a threat economically where it was like, if the U.S. doesn't raise their debt ceiling, there won't be any Social Security. Like last year, like not like 2035, like that month in June. So all veterans, et cetera, et cetera, et cetera.
Last day they
did it barely, right? So we already know that was not it. So the last leg that they had was the personal savings. And I'm like, because I had to consider that I won't have retirement. I'm an entrepreneur. And I knew I did well in school, but I didn't want to work a regular job. You know what I mean? So I'm like, okay, so I need to know everything I need to know about my personal savings then. And that's when I learned about, the 3 financial fundamentals that every wealth creator or person needs to know about how to grow, protect, really earn, grow, and protect their personal savings in order to have financial independence when they get of age. So for me, once they started showing me, okay, well, you need to make sure you're outpacing inflation. And, this is how you can make sure, et cetera, et cetera. You need to make sure that it's in a certain market, right? Because if it's variable, meaning if I, let's just say IRA, if I have complete potential on the upside but no protection on the downside, 2008, $2.3 trillion were lost in retirement account of people's time that they served. Like they can't, you know what I mean? Like you can't redo that again. So I'm like, okay, so I need to make sure that I have complete potential on the upside, but how am I going to have complete protection on the downside? Because as long as I've learned, you never invest what you're not willing to lose. Exactly. So come to find out, there was a vehicle that they had that has complete potential on the upside, complete protection on the downside. And I'm like, okay, I'm getting somewhere. And the last category was taxes, because inflation and taxation are the cancers of financial independence. They're silent but deadly. But you can't see inflation, you can't hear it, you can't see taxes, you can't, you know what I mean? There's things that you can't really avoid with it. And so I found out that there were tax advantage accounts where I can consider where I'm putting my money now. So that way, when I need it the most, the IRS is not taking a majority of it before. Now I'm going to give them what they need. Okay, sure. I'm not saying no great taxes, but I needed to be able to keep as much as possible. And out of all the thousands of financial products on the market, cash value life insurance and insurance products are the only vehicles that do that. Now we can say growth. And lastly, we can say growth. Oh, but this does 20%, this does 30%. The average 401k IRA or market-based investment after taxes and fluctuation in the market average about 3 to 4% a year. The average life insurance product, let's say like an annuity, is typically between 8 to 12% a year, and I have complete protection on the downside. My future self was screaming like, please, do this. So for me, that's what it was. And I recognized that was
Absolutely.
That was going to be my ticket to financial independence for this generation that I'm in, because my parents and my grandparents had never been educated on the fact that, like Tax Code 7702, they didn't know that they could grow, protect, and save their money in such a place. So that's what motivates me and will continue to motivate me to empower individuals economically and through education to really think differently about where we're going and what we're doing.
I hope you guys learned something from this quick podcast. But as a gift to you, my partners at Yellowbrick Financial are offering you guys a free financial review. Okay, so that means 100% complimentary You get to sit down, go over your financials with these two individuals and their team and really get a handle on your finances. Listen, if you are an entrepreneur and you have never had a wealth review, a review of your finances, just understand that 98% of all entrepreneurs earn less than $1 million per year. Just understand that 86% of all entrepreneurs earn less than $100,000 per year. You said it yourself in this podcast, Gene. $200,000 and $300,000 in today's economy is pretty much middle class.
Middle class.
If you have not signed up to get a free complimentary financial review with Yellowbrick Financial, make sure you do so below just by clicking the button, filling out the questionnaire, and somebody from this incredible team will reach out to you. We look forward to working with you. Be blessed.
Look forward to it.